So that's
Okay.
all right. One moment. I'll get my screen share. Oh, come on. Get my webcam on. Alrighty. Well, it looks like we are live, guys. I'm glad to have you all here for the webinar. We'll get started in just a moment here, but we're basically going to be talking a little bit about what's been going on in the world of finance, the censorship that's been going on in regards to people having the proper ability to invest and trade in the assets that they want, and talking about why, at the end of the day, we need to have decentralized finance and fight censorship of people's financial freedoms, just like how we would fight against censorship for speech, for the ability to support or spend money on the things that you love, things of that sort. So anyways, let's go ahead here and dive straight into it, everyone. I'm really happy to have you all here today because it's a very important topic for us here at Digifox. So we got to talk a little bit about this crazy story that's been going on in the financial world. It's actually outside of the cryptocurrency realm, which we mainly focus at Digifox. But as we want to be an all-encompassing finance app over the long term, for us, a big focus point is making sure that you're able to trade and invest in all types of markets, not just cryptocurrencies, but also as well being able to trade into stocks, trading into a property, all types of different asset classes. You should have maximum financial freedom. Well, this story that we're going to talk about, GameStop stock, the Robinhood fiasco, and the future of why cryptocurrencies and decentralized finance are the future set and the future technology for us to be able to revolutionize the future. All of this is going to give a very, very telling sign of where finance is going over the next coming months and the next coming years going into this century. So let's go ahead and talk a little bit about what's been going on in the first chapter here. First chapter is in relation to GameStop. Now, for those of you who are in the United States, you might be a bit of a gamer, including myself and many people. May remember back in the day that when you would go out and purchase video games, you would usually go towards a brick and mortar store or franchise like GameStop. And many of you in this case may or may not know what the franchise is, but like most brick and mortar stores, GameStop has been going through tough times over the last decade. It's like most companies in this case who have focused on trying to have a retail presence, who have to basically maintain properties. They have to depend on shoppers coming into the store rather than just ordering online or digitally downloading copies of their games. All these things have put GameStop in this case in a very rough spot. But before we even can talk about GameStop overall, before we can even talk about this fiasco, we need to take a little bit of a step back and understand the history of how finance has changed. You know, just a couple of decades ago, probably when your parents were at a time in their lives where they were starting to think about investing, you basically got a picture like this when it came to finance. Finance was a bunch of guys toppling over each other, waving their fingers, folding up cards and stuff, shouting at the top of their lungs, trying to garner other people's attention in order to place trades in cities like Chicago and New York. It's that visual kind of drive that most people think about when it comes to finance, this kind of brutal, a dog eat dog world where you're trying to maximize profit and place the proper trades and investments. This is what a lot of it looked like. And if it doesn't look like this, it's usually skyscrapers in New York City with hedge funds, family funds, investment bankers, all types of people who used to manage finance and produce financial services for clientele, usually what would be the equivalent of retail traders or everyday people in this case, people like you and I in this case, who would usually outsource our financial activities to someone else. Well, what we came to realize over time is that finance really wasn't all that complex. We came to realize as well that finance could go without these people, without these middlemen tossing and turning over one another, trying to get the best opportunities in the market. And what we found out is that with the advent of technology, much like how mobile technology and the general internet as a whole completely revolutionized how we communicate, how we purchase things, how we interact in just about every day of our lives, it also broke through the financial sector. And it allowed us to manage a brokerage account from the palm of our hands. Now, that is really exciting In fact, there's many applications that do this. There are applications like we're going to be talking about today that were seen as innovative titans at the time, like Robinhood, that basically allowed you to purchase up shares in your favorite companies as little as one share, and now fractional shares and all these innovations that make it democratized and open for people to get their feet in the door, no matter how much money that they have or how much experience they have. And what's really great is that for people who are investing in this case, many of these apps opened up the ability to have zero commissions. They did all these things that made it so streamlined and simple for people to get their hands on financial investments. And that's great because if we've learned anything over the last few decades, we've seen a widening gap in society when it comes to wealth equality. And most of that is due to the fact of who invests in assets and who doesn't. That's the key goal. As inflation and so many other aspects of monetary policy and fiscal policy affect the average everyday saver, it's benefited to be an investor in different types of assets. Companies like Apple, Netflix, you name it. Any company you can probably think of, the vast majority of them are likely publicly traded and accessible to these types of mobile applications. So again, a very bright change, but we'll talk about how this is slowly turning against the vision that it was originally founded on. And again, there's so many things you can invest on. Just to hit on this again, you could be investing in renewable technologies, things that are tied towards your ethical beliefs. You could be investing in software and hardware companies that are absolutely revolutionizing the world, from fintech applications like PayPal, web browsers and software companies like Google and Microsoft. The list goes on. And along with that as well, companies like Tesla, which have stolen the market by storm over the last year. But what we saw over this year was absolutely out of the water from what we've seen in any previous year. In 2020, with the rise of the COVID pandemic, what we saw was a lot of people indoors with extra cash due to the stimulus check that was distributed to most people in the US and other countries abroad, and a lot of free time on their hands. And that is where people started to get into the game of investing, got into trading and investing in stocks. And this spike here, this blue chart here, is the total amount of E-Trade and TD Ameritrade. These are major brokerage platforms. This is a statistic that they report of the total amount of DARTs, basically in this case, the total increase in this case of new retail trader accounts. These are your everyday people in this case who are starting to trade in the market and get their hands on buying shares in companies. They came in like never before, even faster than what we saw back during the dot-com bubble, which was heavily focused around retail traders trading the market. So this vision that Robinhood and so many applications had built up for so long over the last decade, as they start to provide a new way to invest in finance, this was their pinnacle moment. And they really did capture it well. There's a lot of people trading through these brokerage platforms now. And they've started to set the standard where commissions have gone down and standards have generally gotten better for most people. But this leads us to the GameStop rally, okay? So first off here, we need to understand why GameStop stock went up so much. Right? This is the question that's on the minds of a lot of people, and it leads us towards a very important discussion that we have to have. So let's go ahead and talk here. What you see here on the chart here is GameStop's weekly chart. So each of these candles, these very thin lines, these green and red lines, are all weeks worth of price action for GameStop. And you can see here at the bottom, I've got these different years down here. Down at the bottom, I'll use my pointer tool to kind of indicate it. We can see that this is going over the course of more than 2 decades in this case, or nearly almost 2 decades in this case, but 15 years worth of price action. And GameStop, since back here in 2013, has really been on a downturn. It's gotten beaten down by e-commerce giants, digital downloads, game providers like Steam, etc., that have started to steal market share from GameStop and turn it towards a not so profitable company. And as GameStop shares started to go down, there were a lot of financial hedge funds, companies like Melvin Capital, a part of that traditional financial world we're very familiar with, who decided to do what's known as short selling. On the surface, it's pretty simple. They're basically betting against the stock price. So whereas you could go long into a share, in this case of a company, and you hope to buy it at a low price and sell it at a higher price, there are also a lot of people who want to bet against a stock price. They want to basically bet that maybe, for example, they enter into a short position here at around $40, and they want to bet that it's going to go down to $20, or that it might go all the way down to nothing, to nearly being bankrupt and $0 per share, right? So this is short selling. But in order to short sell or bet against a share price, how do you do that? Well, the way that it's done is, and this is basically what had been happening for the last near half a decade here. Hedge funds like Melvin Capital were basically going out to brokerage platforms and bank accounts, like Robinhood or your commercial bank that you might be depositing funds at. They were going in this case, and they were borrowing the shares of other clientele. And what they're doing with this is they're going to immediately sell it on the open market into a cash position. Now, the general goal here is that they're basically taking a loan out from the bank in this case, and they're going to wait for the price to decline. And then once the price has declined enough, they're going to repurchase the shares at a discount. So let's say that we had borrowed 1,000 shares from a commercial brokerage, in this case, of GameStop at $40 per share. And then now the price has dropped down to $20. All I'd have to do is use half of that cash to buy up the equivalent shares that I owe to the bank, give them back, and maybe pay a bit of interest. And then the rest is pure profit that I get to take. It's quite simple. It's like taking a commercial loan out from a bank in this case, but we're using it for financial speculation on the open market. Now, the thing here is that because brick and mortar retail was just almost, in the sense, inevitably set up to fail, we've seen this sadly and unfortunately happening over the last few decades as e-commerce has completely obliterated traditional business in so many aspects. We've seen that the share price of a lot of these companies who were almost guaranteed to fail by the eyes of the market, going down to $2 to $3 or $4 per share. Well, there's a community online that noticed that there was a large amount of overwhelming amounts of hedge funds starting to bet against shares in companies like GameStop and other brick and mortar stores like Bed Bath & Beyond. Along with this as well, you go down the list here and you can see companies like AMC Network that were highly shorted ever since the COVID pandemic because no one's going to movie theaters. They're pretty much non-operational at the moment. This community that noticed this is Wall Street Bets. It's a subreddit community online that I myself have kind of kept up with from time to time. I don't really partake in it, but overall, it's a community of people on a famous website, forum website, Reddit, that many of you are probably familiar with, who basically are high-end speculators in this case. They like to bet on making wild calls on certain stocks. They buy options contracts, such as calls or puts, that can lead to dramatic wins or dramatic losses if used improperly. And because of this, they noticed something very clear here that, if there was enough buy side interest here, they could basically start to fight against this short interest or this short selling, in this case, of the stock. And this led towards a massive rally in the price of GameStop shares. So was it just simply Wall Street Bets buying up GameStop shares that caused this? No. In fact, the Wall Street Bets community knew exactly what they were doing. What they were inevitably doing is realizing that they could cause what's known as a short squeeze. And a short squeeze is basically the reality that every single person who's shorting, if the price, in this case, if they had entered into shorts down here at this range and price starts to get too high, they have to do what's known as covering their position. They have to pay back to the bank, in this case, the shares that they're owed. Right? If price gets too high, then they won't be able to pay back to the original financial institution. So what you start having here is these financial institutions who were going short on the company now have to take the cash that they have, that they had originally gotten from selling the shares they borrowed, and go back in and buy up the shares. And what this causes is more upside price action, driving up the value of GameStop shares, or GME stock in this case. And it started to cause a domino effect where price just went higher and higher and higher as more shorts in this case got liquidated overall, causing this, again, a massive short squeeze, this big green candle that just seems completely skewed away from fundamentals. So that's what happened here. Now, again, the crazy thing about all of this is, can we agree on some things, right? Maybe Wall Street Bets was coordinating things. Did they possibly violate some rules? Yes, possibly. And that's something for regulators to determine and decide on. But at the end of the day here, who was really at fault? Was it the people just simply buying GameStop shares? Or was it the hedge funds who, ironically, in the title of being a hedge fund, which is to protecting, against possible market risk, did they take too much of a bet? In this case, was it a problem that there was more than 100% short interest, which, bear in mind, in this case means that shares were being borrowed 2 times over, more than, in this case, the entire share supply was basically borrowed more and short in this case than going long in this case. So just ask yourself this: was it that there was too many people placing too big of a risky bet, billions of dollars of capital on one single company? It's subjective to everyone's eyes here, but to the broader market here, this is a risk that the hedge fund took, and they had to cover for their own positions. It wasn't just people simply buying the shares here, right? Now, we need to go ahead and talk about what was made in response to this. Now, it would be one thing if regulatory authorities or the actual exchanges themselves, the New York Stock Exchange, the NASDAQ, the people who are providing the order book to place buy and sell orders freely, right? If they decided to basically freeze the order book in this case, pause trading, if they suspected market manipulation or coordination, as they've made very clear, they will halt trading. But we didn't see the exchanges or the regulators step in this time. We saw the brokerage platforms step in. The same exact brokerage platforms who, over the last decade, played a massive role in innovating and persevering and democratizing finance, at the same time started to play a market maker, which is not what a brokerage platform is supposed to do. They prevented their own users from buying additional shares in companies that many of their own investors already owned. 50% or more of Robinhood investors owned some amount of shares in GameStop. And then they went on to proceed to prevent people from buying additional shares or new users buying shares. They not only did that, right? Outside of this as well, they stopped pausing multiple other shares. And in some cases, they, of course, still allowed you to sell your shares, bear in mind. In some cases, they decided to sell user shares for them to mitigate risk and protect their clients. Imagine for a moment, and just really think about it here. Imagine for a moment, you had, for example, saved up a ton of money in this case, and you wanted to spend it on something. And your bank said, yeah, I don't think you have a right to spend it on that. I'm going to look out for you in this case. Right? Might make sense on a financial basis, right? Maybe you were going to go spend it on, something that is frivolous, or maybe you get tired of in a short period of time. But who gives your bank the right to stop you from going out and spending money on something that's totally legal? Who's to stop you from going in and buying up a financial instrument that you believe is going to go up and is worth your money? It's a transaction, just like buying any good or service. Imagine if someone told you you couldn't go out and buy a good or service that you liked. It's the same exact question here when it comes to making investments, especially in countries that have built around this narrative of giving you the ability as a consumer to have the right to speak your mind, to spend your money where you choose, and put your money and invest it into the things that you choose. Robinhood, the platform that had really pioneered this, instantly turned back on it in just one day. Years of brand reputation that have been built up. And I got to tell you guys myself, I was a big fan of Robinhood. I've used it for years. Lost in an instant to a lot of its long-term users and to many vast communities of traders. And to be honest, I'm not just here to rag on Robinhood as a platform. They're not the only one. There were other brokerage platforms, Interactive Brokers, Trading 212, and many more. Now, there is a ton of different arguments to be made here. Some say that in many cases, regulators had applied pressure on Robinhood. Some, in this case, point to the fact that through the broker-dealers or the facilitators or clearing houses, in this case, where they place trades, there wasn't enough shares, in this case, to satisfy user demand, some other related issues of the sort. Right? All of these arguments may be slightly valid, but the sheer fact that they didn't provide clarity at the beginning, and second off as well, that there's even the fact or problem here that there's not enough shares in existence on the market for allowing people to purchase, that is a broken fallacy in this case. It's a broken element of traditional equities due to rehypothecation and other issues that happen in traditional financial markets. So let's go ahead here and talk about the future here. We have to look towards a solution here that's going to allow us as the end consumer, as the end user, in this case, the everyday Joe, to be able to put our money where we want, to have no questions about it, and be able to take either the reward or risk that comes with it, as free individuals should. Well, We can tell you all with Digifox, we don't control your money. There's no ifs, ands, or buts. When you're making swaps within the Digifox wallet, you are generating a smart contract wallet, or what we call Digifox Pro, which is an autonomous, self-controlled wallet where you own your own funds, and no one at the Digifox team can take those funds. We cannot freeze those funds. Those are your funds to use. You can send them to your friends. You can swap with them. You can earn interest through protocols like Compound. You can buy all types of different cryptocurrencies and tokens that you choose to for the agreed upon fees that are built into the platform. And that's it. Now, sometimes we have issues sometimes where trades might not go through. We're always open about it, guys. Sometimes in DeFi, sometimes your network fee won't be high enough in this case. There's a lot of problems in the world of crypto that are still getting resolved, but you can't be censored for making those swaps. And this is why we integrate into decentralized exchanges like Uniswap. And it's why we try to build most of our foundational technology around the ability where you are in control of your funds at all times. Because markets should be free. You can't have a free market in this case, just like how if I can't go buy goods or services, right? I can go sell maybe a good, or I can sell a good or service, but I can't buy it in this case. That disrupts a traditional free market in the economy. And it also is disruptive in market manipulation when you prevent people from being able to purchase a given asset, but you allow them to sell it. You can't have real price discovery. It's completely disoriented from anything that we could see as free, true finance. Now, again, I want to hit on the point here. If you guys are looking to get in the crypto space, it seems like a lot of the attention has been going from the world of stocks here over into the world of crypto as of recent. If you're looking to buy well-known cryptocurrencies like Bitcoin and Ethereum directly from your bank account, or if you want to, for example, deposit some of your money into your Digifox Pro wallet and then trade through Uniswap and buy all types of tokens. You can buy tokens like the Graph, Sushi. You can buy all types of altcoins like the Uni token, a ton of different cryptocurrencies, Chainlink, right? All these different cryptocurrencies are available. We have over 50 tokens. Actually, it's actually gone up here as of recent. We've got up to around, I think, 55 to 60 different unique tokens that you can trade in Digifox without us touching your funds or preventing you from doing so. The network fees can be high sometimes, so we recommend trading in higher volume. And again, the network fee isn't something that we're charging in this case to try to generate revenue. It's to cover the actual network cost of processing your trades on the Ethereum blockchain. And we're working day in and day out, hopefully over the next few months here, to get it to where there won't be any more network fees. We're very excited about that future. And there's a lot of great people building technology that are going to help us in order to be able to provide that service to you guys. But above all here, this opens us up towards a very important vision here of where we need to go in the future. Again, I think this is a very subjective topic. Some people would say that Robinhood and a few of the other companies were possibly in the right, especially if they were following the orders of regulators. And I'm actually of the position where I do understand that there needs to be regulatory scrutiny of markets sometimes. There can be manipulation. We've talked about it a lot on my channel and here at Digifox. We're very big about compliance and regulation. There are some good rules and checks and balances. But when companies decide to be the regulators, when companies decide to disrupt the free markets that they were built off of, that they were able to gain traction and authority of as they were serving as an open provider, this opens up the question of whether or not there should be any central authority in this case or any commercial company that gets to dictate where you send your money to, whether you get to claim the funds that you own or be able to trade or invest in the assets you choose to. Perhaps it's much better, rather than in this case dealing or worrying about possible, in this case, overvaluation of an old outdated share that's broken away from fundamentals. Perhaps that's not the problem. Perhaps in this case, it's about giving people an open market. In this case, the solution at the end of the day would be giving people the opportunity to be able to invest, risk, and speculate in what they want. And if they get burnt, to learn from it in this case, and be able to learn from that experience and go through on their investing journey and make better decisions in the future. I can speak for many here when it comes to my financial journey and to many others in the crypto space, whether it's in crypto or stocks. I remember the first trade I ever made. It was a combination of two different trades. One was a fundamental investment in a well-reputable solar company, and the other split of my cash that I put in was in a penny stock. And I lost about 30–40% of the penny stock trade. And on the other trade, within that same period of time in a month, I made about 30–40% investing in that sound financial company in an innovative sector that was a lot more established, right? And those two, even though I had a loss and a gain, which pretty much neutralized each other out, it was a learning experience. And it's that same learning experience we want you all to have here at Digifox so you can continue to grow as an individual investor at the end of the day. We don't want to be the dictator of how you control your finances. We want to give you the absolute set of tools and functionality that you need to build your own financial journey, because we can't decide that for you. And that's the beauty of decentralized finance, giving you permissionless, accessible technology to all types of services without the authority of taking that away from you whenever we so choose. That's the beauty of DeFi. And it's built by people like you out there, whether you're using the protocols or building them themselves. So anyways, I rambled on enough, guys. I appreciate that you all joined in, and I hope you enjoyed my rambling on this, because I think it's a very important subject to talk about, especially for us here at Digifox, where it's very close to heart for us.
Awesome. Thanks, Nick. I don't feel like there's any specific questions in the chat. So unless anybody has anything they want to stick in there real quick. I had actually not heard of anything with Robinhood until like yesterday, and everyone was talking about it, and I wasn't really sure what was going on. So
yeah, it all happened yesterday. It was pretty wild. I think, again, like I said, as someone who used Robinhood and stuff, I'm not here to just bash as a company, but it was a bit close to heart because I think many people, including myself, had used it for so many years and never had any experience like this. And again, I think it's a principle basis above all. Are we going to, again, be a service provider that does what we intend to do? Or in this case, are we going to start backtracking? And, I think that's basically why people were a bit thrown back, because there was no problem buying it up over the last couple of months and making previous speculations. But this time around, there was a prevention of being able to further buy it at one point when it was, had already made some major moves.
So it was a stock issue. Okay. Because when I first heard about it, I thought that was like they'd done something unethical, like on their platform or something. But yeah, this makes a little bit more sense, and they just like their stocks got all kind of messed up. But, wow. Okay. Wow. We have a couple questions coming in now. Paul says, "What is your vision for Digifox 10 years from now?"
Oh, that's my favorite question. And usually people ask me, like, what's your vision in 6 months or 12 months? I think it's the future that unfortunately a lot of traditional fintech companies won't be able to meet on. A lot of companies focus on one specific service. And that's one of the big 3 problems that we try to fix at Digifox, like needing a dozen different applications for finance. This to me has not only made it difficult for someone fortunate like myself who comes from the US, who has all these applications at their disposal, but also for people as well who might be in other less fortunate parts of the world where they're still struggling to get a bank account. I think at the end of the day, you will not be able to get the vast majority of the world financially sound and literate by having to require them to download 12 different applications. It would be like saying that you have to use 12 different social media applications just to communicate or speak your mind. I think that it is going to be in the long term in the best interest of everyday people to build a financial application that aggregates all of your needs into one specific place. And that's what we're trying to build at Digifox. The ethical goal of that as well is to make sure we build a place that allows everyone to have as equitable as possible of access to financial services. So whether you're like myself, born in the United States, you're born in Japan, if you're born in the UK, if you're born in Nigeria, if you're born in South Africa, if you're born in Brazil or Argentina or Venezuela, it doesn't matter in this case. We want to try to access as many financial services as possible and give it to the everyday people. Again, we have to be compliant with regulations. We have to be in check with a lot of things at the end of the day. But at the same time, we want to be able to uplift as many people as possible and give people both the protective financial services that they want, but also the opportunities to grow as well. That's the general goal over the long run. But we've got a long way to go. I'm not someone, I think a lot of CEOs get too caught up in their vision and think that they can get there overnight. Many people on the team will tell you I can do that maybe sometimes, but I think at the same time, I'm realistic and know that this is that 10-year window in this case where I think if we can nail this, if we can do this, if we can help people earn proper rates of interest on their savings again, and outside of that, we can open up payments, make payments frictionless, zero cost. I think if we can do all those things, then we're gonna leave a big impact on the world. So we'll see.
It's awesome. It's always fun hearing Nick talk about the vision of Digifox. That's always my favorite question too. Wardo says institutions are not buying Dogecoin, so what does buying Dogecoin help or prove?
That's a good point. So Gordon in this case is basically referring to the fact that the same communities like Wall Street Bets, all these groups are talking about buying Dogecoin. And to be honest with you all, as I talked about earlier, it really doesn't do anything. I mean, at the end of the day, people could argue. The ironic thing is that you can, much like Bitcoin in this case, and just like assets like golds or stocks in this case, it's really interesting that a lot of people don't realize at the end of the day. But it's the reality of the case here is that, most stocks in the world don't pay dividends, right? And along with that as well, many of the stocks that have been going up have no profitability. They're just simply tech companies doing something. Crypto, Bitcoin doesn't produce anything in this case. It's just a digital ledger in this case. So if I own one Bitcoin, I own 1 out of 21 million Bitcoin on the Bitcoin network. And the same goes here with Dogecoin. Dogecoin is whatever people make it. The value of Dogecoin in this case is whatever someone will be willing to pay for a Dogecoin at any given time. So what you see here in the sense of Wall Street Bets and all these communities is people just simply speculating. They're piling on, hoping that they'll be able to sell it at a higher price. That happens pretty much in any market if you think about it. And people use that as kind of an insult, so you're just buying Dogecoin to hopefully sell it at a higher price. And it's like, that's probably what most people are doing. Just like how when you buy Apple shares at $100, whether you're day trading or swing trading, so maybe have a shorter time frame horizon, or investing for the next 30 years, I think everyone hopes to sell at a higher price in that case. Everyone hopes to make that bet earlier on. So I think that's what I think overall people are just like at this momentous time right now and stuff. People are starting to realize that markets can be broken at the end of the day. They can have these massive fluctuations. And we've had bubbles in the past that have been non-coordinated like this. So again, I think it brings up a really interesting discussion. But above all, if there is real market manipulation, if there are people who are just manipulating and trying to get people to buy Dogecoin, there are regulations set in by the CFTC, by the SEC, with all these regulatory bodies who do know how to keep these things in check and balance. So again, I would just say above all, I trust them to be able to combat any types of issues like that. And it's upon the companies across the world and stuff to do our best to help against market manipulation, to hopefully provide as sound markets as possible.
Yeah, when I first learned about all these different coins too, it's like the only reason a coin has value is because people buy it, correct?
Yeah, exactly. It's basically, it's the same as you can think about this outside of financial markets as well. Think about it like in the sense of like designer shoes, right? That's a big thing. A lot of people go in the market and flip designer shoes. The only reason people can make so much money off of designer shoes is because at the end of the day, they're able to get in buying those shoes early on and sell it to someone who really is willing to pay hundreds of bucks, $1,000, $2,000 for those shoes. It's not me personally, but someone out there will. And I can guarantee you, as the new wave of shoes come in, those shoes are probably not going to be able to sell, especially if they've been used for the same price. And it really depends on what type of asset you're looking at. If you're looking at, a respected company or a large cap cryptocurrency like Bitcoin, those are much more sound investments. They're grown. They have network effect. They're not going to, go away tomorrow, most likely in that case. Whereas Dogecoin, very commonly, if you look at the long-term chart of Dogecoin, it has these very big spikes and declines, as it's tended to be just a speculative vehicle for people to try to buy in low and sell high. That's the general goal.
Mint says, do you think there will be another stock that will be like GameStop that will skyrocket like its value like crazy due to a short squeeze?
Yeah, so I think that there's a chance that I can't sit here and tell you guys to go out and buy any specific shares. A, because of my moral conscience, and B, as well, that I'm not here to recommend any purchases or sale of any securities in this case. GameStop's a publicly traded company. It's like any investment. You have to do your own due diligence. If you feel like you need it, you can talk to a financial advisor. But the thing is, overall, just to explain the theory, just to be clear with you all, the theory here in this case is that the communities out there, the Wall Street bets, the Wall Street communities, are basically targeting purchasing in mass, basically overtly short-sold companies in this case. So again, all those hedge funds and those large investment funds have basically been placing large bets against different types of companies, and the belief is that all these communities are going to buy up enough of the shares in this case that it would cause that disruption. That's just explaining in this case. Again, I'm not telling you guys to go do that, and that it's not a guaranteed way to make profit whatsoever. What I think is much better at the end of the day is to have a well-balanced, diversified portfolio where, above all, you understand the risk associated with what you're investing in. Just know that if you do go down that route and stuff, it's likely built off of pure speculation. And as the greater fool theory states in this case, you could end up being on the tail end where you're buying at the higher price in this case. So the greater fool theory is basically where you think you'll be able to buy something and sell it to someone at a higher price. And that can happen in any market, but it also happens very, very frequently. That's the kind of mindset as people are buying something they don't intend to hold long term. So that leads to bigger fluctuations up and bigger fluctuations down. So I can't give you any recommendations on stocks, but there are plenty out there in that case if you want to read the strategies of what people are doing.
Ralph says, do I get the same interest in Digifox app as in the Celsius app? And I think we need to like earning interest. And that's kind of an interesting question because there's like different kinds of interest earning, right?
Yeah, that's a good point. So if you're talking about if you're earning interest in sell, we don't offer that functionality within Digifox. But if you're talking about like kind interest, so depositing USDC and earning USDC, depositing Bitcoin and earning Bitcoin, yes, we do have the same rates in this case. The only thing is we abbreviate them a little bit differently within the application and stuff.
Yeah.
But yes, you get the same interest rates as you would. We are basically a connected partner with Celsius in this case. We're one of the first ones they had. They're a great company. Pretty much the largest deposit platform when it comes to earning interest on crypto assets. There's a reason for it. They have great security and privacy standards that we really respect, and we love working with them overall as a company. So again, if you're looking to earn interest, you can, I know a lot of people are talking about this, as we mentioned earlier, the network fees and stuff. That's only when you're making swaps where it's really overbearing. If you are buying from a bank or debit card, some cryptocurrency, it'll go straight over into, it can go straight over into your Celsius account and you can earn interest on it very simply. So it's really nice in that sense.
Yeah, and I actually just learned this by talking to the Celsius team and doing some research, but we show the APR, which is annual percentage rate in the Digifox app, which will show you the rate at which the interest is going to be earned over years, considering if the rate doesn't change, because it can. Sometimes things fluctuate. Like when I first started here, it was Celsius was for USDC was earning like 8% interest, and now it's like 10%. So it can fluctuate up or down. But we do APR, like I said, is annual percentage rate. Celsius will actually show APY, which is annual percentage yield. So some people get a little bit confused because those rates are different. And it's actually showing you, it's taking into account compound interest. So it'll show you like how much you are expected to earn by the end of the year, assuming the rate doesn't change.
That's a very good point, Hope. Yeah, I guess I forgot to mention in that case and stuff that there is the difference on how they display it on their website and their app. That's very good. That's a very good point, though, of keeping in mind compound interest as well, that added return you get from actually letting your weekly payments, as you get paid every Monday, compounding in this case. So your interest is earning interest, which is pretty cool.
It is pretty cool. Compound interest has been described as pretty cool.
Yeah.
Let me see here. What else? Might want to take this one. Virgil wants to know what the progress is with our issue we've been having with Celsius.
Yeah, so the good news is that we're looking to hopefully have a fix for that this week. We've talked with our engineering team overall. It's basically just with a minor issue that we're having on the back end with Celsius's API, or basically our communication with them. Luckily, there's no security issues or anything like that. It's just basically, long story short, with the influx of users that we have and the way we're interacting and using the API. In this case, that's something that's been causing some issues where KYC applications haven't been basically going through properly on the end with the KYC provider that Celsius uses. So again, on the security side of things, everything's fine. In the sense of the wait for you guys, I do want to spend some time to apologize for it. It's taken longer than we've expected to actually get it resolved, but we are working on it. And again, with that, we'll be sure to give you guys a notification once it's all free. And we might even do a little bit of a kind of celebration in this case overall. We might we're going to probably actually make some other big changes with this soon after, where we're going to remove the actual deposit fee in this case. So you only have to pay the equivalent of a withdrawal fee later on. Outside of this, well, we also want to open up more assets on the platform, and we might do a little, special giveaway to those of you guys in this case who have waited for so long. We want to make sure we can make it up to you guys, see if you give us a second chance on it and stuff overall. And again, we do want to apologize for the wait on it, and appreciate all your guys' patience in this journey.
Paul says, do you see a future where American employers pay their wages in USDC or USDT instead of dollars? Really cool question.
That's a good question. Big picture. I don't know. We're so early on in all this to say whether like specifically USDC or USD Tether will be the dominant stable coins of the world. I think USDC's got a great chance. I mean, Tether has obviously had a large market share. We prefer USDC at Digifox. But yeah, I mean, honestly, I think that there is a really good chance. It really depends if Ethereum and other decentralized networks like it are really the staple that people turn to. We've heard talks of central banks and other, banking, private commercial banks talking about new payment networks. And I really don't see them getting to be as revolutionary as stablecoins can be on a scalable Ethereum blockchain. And the reason why is because there's so much you can do when you have USDC. First, in this case, there's a dollar backing every USDC in this case. So it's basically those dollars are locked up. You have a dollar in this case that you can use. Now you can go earn interest how you like. You can send it to who you like across the world. So goodbye international wire transfers and remittance costs. Goodbye to foreign exchange fees when you can probably swap through a much better decentralized tool from one currency to another. Once there's other stable coins other than USDC. And to your point, yeah, I think a lot of people are going to want to get paid in USDC. They may also want to get paid in crypto as well. So we've got a lot of things we're working on in this case to basically bolster that ability to, whether it's when you're getting paid, the services you want to access with your wealth. All these things are at the centerpiece of what we're focusing on Digifox. And we're building on that, that decade-long vision that you mentioned, Paul, in that case about, maybe this is going to be the norm for everyone in the future. We really don't know. We're so early on. But I genuinely believe there's a fighting chance at it. And the kind of freedom you get, it's like having a digital dollar. You're not depositing it with Digifox in this case. Now, if you do put it in Celsius, yes, it's like a traditional commercial bank. But if you want to be fully autonomous, you can go do that right now through Compound or just holding it in your Digifox wallet. It's just as similar to having a set of cash in your physical wallet, which is really, really exciting.
Yeah, and I know we were, this is kind of like a similar, it's not a question that's on here, but it's something that reminded me of it. That we eventually want to have the feature where you can direct deposit your paycheck into Digifox.
Yes, right? That's correct. Yeah. So this is one of the things we're working on. We don't have an estimated time frame for when we're going to be getting it out, but it is something that we are working on. So we want to basically get it where you can receive income into your application. So you don't have to make a bank deposit or debit card deposit. It just happens every week. So you don't have to deposit your entire paycheck. You get a fraction of your paycheck, in this case, directly into Digifox and into your favorite cryptocurrency, which we're really excited about.
Let's see what else. Yuri says, hey, Nicholas, what do you think the recent GameStop/Robinhood scandal will mean for crypto specifically?
That's a good question. I don't think it's going to be much for crypto. And the reason why is because, what would have likely happened here with the whole GameStop fiasco. This isn't the first round of speculation or supposed, market manipulation in the short term. Stuff like this happens all the time in traditional finance. I mean, this was an exaggerated and exacerbated form of it because it had a network effect to it. But in the sense of crypto, I don't think it's going to censor or shut down crypto. And the reason why is because, whether it's the exchanges in this case themselves, I actually have, I have a high set of standards and belief in this case that even the larger exchanges like Coinbase and Binance and Bitstamp and Kraken, they probably wouldn't prevent people from trading in this case. The only thing that they're going to likely have is possibly system maintenance, or they might have a crash in this case where they can't service a massive set of buy orders or new traffic. That's happened commonly at a lot of platforms. But in the sense of like regulatory impact or preventing people from buying crypto, there's not much you can do in this case. If people want to go out and buy something for, double or triple the price in this case on a given day, you can't prevent them from doing that. They have a right to do it. And the ironic thing is that, we kind of hyper sensationalize and focus on this GameStop story because all these people are buying at crazy high prices and it's gone vertical. I look at it on, an equivalency to Bitcoin. On that same example we talked about, do we allow people to pay 5 or 10 times the premium for something that they could have bought for, 1/10 or 1/5 of the cost, a couple of years ago? I say the same question with Bitcoin. I bought Bitcoin at $1,000 and I was shouting to my family and everyone like, oh, you got to buy Bitcoin. You got to check into it. You got to look into it. And then of course they didn't care about it. They thought I was crazy, and much love to them. And I would hope they hold the same love for me still, even though I probably appeared crazy at the time. And then they're all interested buying it at $10,000 or $20,000. And the same goes with the recent cycle that we've seen going to 30 to 40K. That's when everyone wants to buy it. And it's not so much a problem in this case with allowing people to buy or sell what they want. That's not the problem. The problem here is proper financial education. People should learn to ignore their emotions in this case. We have to teach people better about realizing, it's probably not best to buy it at those highs. The unfortunate reality, though, of markets is that someone is going to buy at those exacerbated highs. Someone is going to pay that premium. Someone who feels that it's a good deal there is going to buy it and probably take a loss. That's the market. It happens. The only thing you can do is better prepare yourself to be on the right side of the trade or investment. Or put your money in a savings account and, play it safe. There's nothing wrong with that. You can do that through Digifox, through our integration with Celsius and Compound.
This is interesting. Will says, what do you think is the future of XRP?
Oh, sorry. Sorry, you were cutting out there a little bit.
Oh, okay. What do you think is the future of XRP?
Yeah, so I can't speak on XRP too much. I mean, honestly, there's the current SEC claim that it is a security in this case. I have no idea what's going to happen. Above all, XRP, just like any cryptocurrency, if you invest in it at the end of the day, you have to be willing in this case to assess the risk and then again, assume whether or not it's going to be going up or down in this case before you buy or sell it. It's become a lot less tradable in this case due to exchanges starting to take into account the claim from the SEC that it is a security. You cannot, unfortunately, trade XRP in Digifox in this case. We've just never offered the ability to do so in the first place. And second off, if we did, we would remove it due to the new rules from the SEC. You got to be compliant and meet those regulations. But again, I think at the end of the day, the Ripple network in this case for the ability to do bank transfers, yeah, maybe it's better than Swift or some of the legacy networks that have been around for multiple decades. But I think that what has a better chance here, if you want my genuine opinion, I think that USDC and other stable coins on networks like Ethereum have a much better chance of being the new payment network that the world relies on, in my opinion. But it's not there yet. It's going to get there, though, hopefully over the next few years.
This one, you would probably know what it means. I'm not entirely sure. Wardle says, you mentioned NIO early on when it was around $7. Any chance that you start a stock market trading channel?
That's a good question. I'm assuming the person is talking about NIO, which is it's a Chinese electric motor vehicle company. They were claimed to be the Tesla of China in this case. And here's the thing overall, again, as I mentioned earlier, I can't talk per se about buying or selling securities, guys, but I will say, we do talk about stocks on the Data Dash channel, my personal YouTube channel. And NEO was one of the stocks that we had talked about in a newsletter group that I write for called the Dash Report. It's my personal newsletter that I write for. And yeah, I mean, we kind of were early on at seeing this company and many of the electric vehicle companies out there. I had no idea, to be completely humble and honest, that EV stocks were going to take off like they did this year. But it's an exciting industry. I think it's a very, very exciting industry. I would just say to be careful, though, because like any other type of a trending industry, at the same time, there can also be bursts if there is a bubble in this case, if the valuations have gotten too high or skewed away from the fundamentals. So again, be cautious in that case, do your due diligence, and again, assess the risk of any position that you're going to take in that case if you decide to make a position that coming. Now, you'd asked if I do a stock trading channel. I don't think I'm going to create a channel specifically for stocks, but on the Data Dash channel, we definitely do like to talk about stocks from time to time in that case.
Alex says, this is interesting too. Hi, Nick. What is the difference between AAVE and Lend? And what can I do with my Lend? Thanks.
That's a really great question. I know Hope and I have dealt with, we all do customer support at Digifox, and we've had a couple of users ask about this as ETHLend in this case, or AAVE is one of the largest DeFi protocols out there. I've gotten to meet the founder, Stani. He's a really nice guy. But the thing is, in regards to AAVE versus Lend tokens, so ETHLend was the original brand name and the original token for the AAVE ecosystem. It's one of the largest deposit protocols, similar to Compound. If you have Lend tokens in this case, you need to go online and you need to be able to Google, in this case, AAVE token migration. And you want to make sure to go through the official AAVE website, and you'll be able to actually migrate your Lend tokens into AAVE tokens. And you can get them sent back, in this case, to your Digifox wallet if you so choose to. But that's the general gist. Is there's basically a token migration program, as they not only launched a new version of AAVE, but they also wanted to rebrand the tokens in this case.
Cool. All right. Well, that is roughly that's pretty much it for the. Oh wait, no, we just got another one from Paul. Last question, he says. Why would someone choose to hold fiat in a bank earning no interest when they could convert to stable coins and earn way more interest with Digifox? That's the question that we asked.
Paul, that's the question I've been asking. No, I think that's a very fair question, Paul. So to be honest with you guys, I think one thing that this space in crypto does lack is sometimes, not always, but it sometimes lacks a bit of transparency and stuff, and just being honest to talk about the pros and cons. Here at Digifox, whether you figure out Digifox is the app for you, or even nothing in crypto is the answer for you, if there's another app that's going to be the best for you, we're always going to tell you guys straight and to the point about like what we think is overall what we can analyze is the best option. For users who are earning interest through something like Celsius in this case, it can be a great idea if you're familiar with the technology. If you can find an app like Digifox that or in this case the Celsius app, like all of these apps that can streamline the entire process for you, smooth the on-ramps in this case. In that case, that's really great. It can be great. You can earn a lot more interest, more than 100 times what your bank is going to pay you in most cases in the US. The only type of risks that can come with it are a few things. One, stable coins in this case. You have to first, in this case, be certain that the stable coin you're using, whether it's USDC or Tether, above all, are actually backed by something in this case. So there's a big debate whether or not Tether is backed. We're not here to make a claim whether they are or aren't. It's kind of your choice to use Tether if you want. Now for USDC though, there is a reputable set of two companies, Coinbase and Circle, two of the largest institutional grade companies that help issue USDC. And they also get routine audits and checks on the actual reserves that back up each new issued USDC. So there's $1 for each USDC. Yeah. And they can be physical or digital, but in this case, there is a one-to-one backing, right? So in that case, you have to worry about stablecoin risk. Luckily, USDC in the vast majority of cases for people works great. I use USDC when I earn interest through Celsius. I prefer it over Tether. The second thing you have to worry about in this case is custodial risk. So Celsius is holding your funds in this case when you deposit with them, all right? And because of this, in this case, there is some custodial risk. If Celsius doesn't do proper management of holding those stable coins, then in this case, for example, if there is some kind of hacker, or there's someone who finds a way to break through their system, right? There could be a loss of funds in this case. And that's different from a traditional bank in this case that might hold something like FDIC insurance. Now, this is the standard across all crypto protocols. You notice, as I mentioned earlier, probably that Celsius is the largest depositor in this case. And technically, they don't have a massive insurance name like FDIC behind them in this case. It's pretty much the same with all crypto companies in this case, right? You have the same custodial risk putting, crypto in Coinbase and Binance. It's just that they might use different systems and have different practices. And that's why, again, if you are fearful of something like that, we're not here to say that, well, Celsius is the only option. No, you have many other options. You can generate a Digifox Pro wallet. There's a bit of a cost to it, as you're deploying a unique smart contract wallet on the Ethereum blockchain, but it can be your own wallet. It's self-custodial. You don't trust Digifox or anyone else other than you to manage your own funds. And then outside of that as well, you can earn interest through decentralized protocols or smart contract applications like Compound. And you can earn, some good rate of interest, hopefully, and stuff. They fluctuate quite variably a little bit more than Celsius. But what's nice is that you don't have to, per se, trust in this case that a company or a group of people are going to take care of your funds for you. Some people care in this case, and they want to have a custodial platform taking care of their funds. They like that, having another company or someone who's a, respected party taking care of their funds in this case. It really depends on who you are as a user. So again, we always like to keep it honest here, guys. At the end of the day, we do say that for most people, Celsius is probably a better option because, A, the rates are generally higher, and B, as well, when it comes to managing, with Digifox, it's actually a bit abstracted. If you feel Compound's better, it's just as equal and pretty easy to use. But in the sense of running using a MetaMask wallet or using some other type of software wallet, where you're basically given a 12 to 24 word seed or recovery phrase in this case, that's a huge security vulnerability if you lose that seed phrase. So yeah, we always bring that up. I think a lot of people in crypto who champion the idea of not your keys, not your crypto, they forget that sometimes. And it's where inevitably, ironically enough, a lot of people lose their money because they lose that recovery phrase that is the life or death of their funds.
Yeah. So I know people who lost their seed phrases or their passwords and Bitcoin like that. And also that guy that only has that one guy that has 3 chances left or whatever to get access to the 2 million Bitcoin or whatever it is that he has.
Yeah, $2 million. Yeah, it's crazy. I mean, there's all these really bad practices for the last decade, right? Crypto has made some huge strides. There's a phenomenal community behind it. Mm-hmm. One of the biggest things that we failed on is user experience. And the great thing about Digifox is that you can still be self-custodial, but you use your phone and email, 2 things that only you should have access to be able to recover your funds. And that's a really beautiful thing, I think. It's that missing piece of user experience that this space has needed for a long time. It was well overdue. So we're very excited to be kind of a leader in that industry and that part of the industry, and making wallets a lot more simple to use and almost making them abstract, just like your traditional financial applications do it.
Mm-hmm. And a lot of people ask, well, is there anything I can do to be more secure with Digifox? I know we talked about adding multi-factor authentication, something that we're going to add in there. You can also hide it in your phone, so don't put it on your home screen. Make a good password for your phone so no one can get into your phone. Some people have asked, well, what if something happens to me? There's a lot of different things you can do. Is you can give all the information somebody else would need to get into it, because you can recover it on another device, which is
exactly
really cool.
Yeah. Well. So. There's all types of security practices, and we take security as kind of a number one priority when it comes to Digifox. We like to move fast, but we first off focus on, is what we're implementing or integrating secure? One of the critical things that we're working towards, there's 2 big technological things that we're working on doing. First off is, as Hope mentioned, we want to provide the ability for you to use authenticator applications instead of your mobile number. So this could be, for example, like Google Authenticator, AAVE. There's a lot of different apps out there in the market that do a great job of this. And they can help in this case towards utilizing basically a localized form of two-factor authentication versus your cellular number. The second thing that we're working on is multi-factor authentication. So this could be a password in this case that you have to type in, or it could be, for example, some other type of third verification that even if someone was able to get access to that device, even if someone was able to get access to your email or the basic details you need to log into your account, in that case, you'd still have extra additional protection. And there's still a recovery period where if you, for example, have someone else trying to break into your account, we can actually prevent it in this case overall if we detect that it's a fraudulent one, if you report it to us. So there's a lot of checks and balances to make sure your crypto is safe and secure.
It's kind of cool because I've been looking into like smart contracts and understand a little bit better. And it's like it's a really good mix between an exchange where like it's kind of like a centralized exchange like Celsius or where they kind of hold your keys and they are custodians of your private keys, and then like in it's a good combination of that and also like another type of exchange where it's like you have to like have the seed phrase on your piece of paper and you keep that in your safe. So it's more like you get to hold the keys, but you don't have to write down it on a piece of paper. The keys are on your device and you can transfer it to another device if your phone gets destroyed. So it's a really interesting and kind of cool combination of the two extremes, I feel like.
Absolutely. Yeah. Just to summarize on that, Hope, you hit it right, hit the nail on the head in that case. Basically, the two biggest problems in the space over the last few years were companies who held funds for users, those custodial platforms, not maintaining good practices for custodianship. There were stories like a Quadriga CX in Canada where the CEO of the company had the private keys, the access to the direct funds of their users on his laptop. And then outside of that as well, you have the other extreme where there's people who are having to manage 12 to 24 word phrases. And if they lose it or they didn't write it down, and they had tons of money in there, those funds could be lost forever if the wallet gets logged out, you lose your device, or in this case, you lose that paper note with the seed phrase. So what we kind of wanted to do at Digifox is integrate good custodial partners when necessary for providing services like earning interest, who have industry grade standards for security, who have a good reputation behind them as well. And outside of that as well, integrating in the ability to have your own wallet. And I think that, and also obfuscating the need for that seed phrase. And the cool thing is that Digifox doesn't know your recovery phrase. And the great thing is you don't have to worry about knowing this well. Your phone and email are the keys to being able to get access to that. And those are things that only you own and have control of, which is really exciting.
Awesome. We've got a few more questions, but it is on the hour mark. So I'll probably cut it off here. But thank you so much for your time, Nick, for going through all that information, kind of updating people on what's going on in the world. And for the Q&A, it's been a pleasure as always.
Absolutely, Hope. No, thank you for making the time, and thank you all as well for joining us. We always enjoy this kind of, I love giving the kind of presentation stuff and, going back and forth with Hope and stuff, kind of talking about the things you guys bring up. I think you brought up a lot of great questions about us at Digifox, our thoughts on the markets and getting started with crypto. This topic that we talked about today is very close to heart for us. And I know that there are a lot of you out there looking for hopefully that new platform or that new kind of path to being able to have more control over your finances. And if it's important to you, feel free to check out Digifox. And if you ever need anything from us, we'll do our best to get back to you. We have customer support integrated directly into the application through our intercom integration. It's found in the profile tab, the bottom rightmost tab on the application. And you're welcome to contact us at any time and stuff, and we'll do our best to get back to you as soon as possible. But thank you again, Hope, for making the time, and thank you all for joining us as well.
Thank you so much.